Hello and welcome to the Financial Room. I'm your host once again, Natasha Bridge-Mohan, President of the Bridge Group of Companies and mortgage broker of Mortgage Intelligence. Today's topic is a really important one. So to my audience, if you have any young children or young adults in your home that are recently just started working or is working, it's very important that you grab them right now and have them sit with you so they can hear the next 5 minutes. Or if you're already a young viewer and you're watching my show, listen up very carefully. This topic is very important, my young friends. I'm going to talk to you about the 5 top financial mistakes young people may regret later. And some of these things, hopefully you'll be able to learn and you'll be able to eliminate these mistakes by not even trying them at all. So number 1, a young person may say, oh, I bought life insurance policy just to save on taxes. Now, life insurance policy, the purpose of life insurance policy is for your family to be left with enough money to pay off your debt, and your friends or your children or your spouse to be left with something which is enough for them to maybe afford their future lifestyle. You do not save on taxes when you are alive. The money that's from the life insurance policy is for your surviving beneficiary, not you. So that is definitely a myth. So be very careful. Second of all, I wasn't sure where to invest, so I didn't. That is not a very mature and responsible way of leveraging your money to invest. Because if you have your money sitting at the bank, what do you think the bank is doing with your money? They're lending it at very high interest rates, and they're paying you little or nothing at all. So speak to a financial advisor or a mortgage broker like myself, or a real estate expert like myself that can educate you in some amazing investment products that are out there. Second of all, I bought stocks to double my income like my friend did. Be very careful, my young viewers, because as much as stock markets can be very lucrative and offer very aggressive returns, they can be very high risk and very volatile. Now, the stock market goes up and down. And in order for you to make very good money in the stock market, you have to monitor it. You have to have substantial money in there. And most of all, you have to be able to take risk and be able to face the consequences if you are to lose that money. So be very careful if you choose to invest with stock market funds, if I may say. I can almost guarantee that it's not going to make you retire earlier. Also, I'm going to change job every year so I can make more money. Now, that is not really a good investment. First of all, you need to invest in yourself. Stick with a good company. Money is not always everything. Experience is what counts. Learn with a company that teaches you experience in terms of your job, teaches you networking, teaches you in terms of the industry, expert and knowledge that you need to be. You want to become that subject matter expert based on the education that you took. And converting and turning over job after job does not look very professional on your resume. So it's very important. If you're a young person, just to make another $5,000 to leave one job to go to another, that is not a good investment choice. So that's a very important financial mistake a lot of young people make. So sticking to a company 3 to 5 years will almost guarantee a very solid resume and more power in terms of negotiating for your next interview and when you're signing up that contract. So also, I forgot about my education loan. A lot of young people, unfortunately, have to take education loans. And education loans sometimes get buried after your post-university and college. So be very careful and make sure that you pay those debts on time. As usual, we're always here for you. You can reach us toll-free at 1-866-553-7467, 1-866-553-7467. We're definitely the home of all of your financial needs. Please don't hesitate to contact us anytime. Until then, talk to you soon.